Everyone wants money, but only a few truly understand how to build and keep it. We live in a time where financial advice is everywhere on social media, in books, from so-called gurus shouting at you through their phones. Invest in crypto. Buy real estate. Save more. The problem? Most of what you hear is the same recycled advice. But the truth is the real secrets of wealth, the ones the rich actually use, are rarely talked about. And that's exactly what we're uncovering today. Welcome to the Wealth Blueprint channel. In this video, we're diving deep into 10 wealth secrets nobody talks about, 2025 edition. These aren't just tips about money. They're principles, mindsets, and strategies that separate those who survive from those who thrive in today's economy. Because here's the thing, wealth isn't just about stacking cash. It's about understanding the invisible rules of the game, and once you know them, you'll never look at money the same way again. So, what kind of secrets are we talking about? The kind of secrets that explain why some people bounce back from financial ruin stronger than ever, while others stay stuck for decades. The kind of secrets that reveal why net worth is overrated and why cash flow is king. And the kind of secrets that show you how wealthy people quietly build empires without ever showing it off. This isn't about luck. This isn't about being born rich. It's about learning how to think, act, and move like the wealthy do in 2025. Now, before we get started, hit that subscribe button and turn on notifications, because this channel isn't about shallow tips. It's about giving you the deeper strategies that schools, jobs, and even traditional financial advisors often leave out. All right, let's begin with the very first secret, the one most people overlook, but the wealthy know all too well. Chapter 1, the power of invisible asset. When most people think of wealth, the first thing that comes to mind is money. Cash in the bank, cars in the driveway, or houses on the hill. But here's the truth. The wealthiest people in the world don't just rely on physical possessions. Their true power lies in invisible assets. What do I mean by invisible assets? These are things you can't necessarily touch, but they shape your entire financial destiny. Your reputation, your skills, and your network. Let's break it down. 1. Reputation. Your reputation is like your invisible credit score with the world. When people trust you, doors open automatically. Investors, partners, and even strangers are more willing to support you because they believe you'll deliver. And the reverse is also true. If your reputation is broken, no amount of money can buy back trust. Think about Warren Buffett. He famously said, "It takes 20 years to build a reputation and 5 minutes to ruin it." That's why protecting your name, your integrity, and your word is one of the smartest investments you can ever make. 2. Skills. Now let's talk about skills. Money can be lost overnight, but skills are permanent wealth. When you learn how to sell, negotiate, write, code, design, or manage people, you carry that wealth wherever you go. In 2025, the world is moving faster than ever. AI, automation, and technology are changing industries almost overnight. But here's the secret. Skills that can't easily be replaced, like critical thinking, leadership, creativity, and emotional intelligence, are skyrocketing in value. A millionaire with no adaptable skills can lose it all. But an average person with powerful skills can rebuild their fortune again and again. 3. Networks. The final invisible asset is your network. You probably heard the phrase, your network is your net worth. And while it may sound cliche, it's one of the biggest truths about wealth. One introduction, one conversation, or one connection can change your entire life. Wealthy people don't just work hard, they connect smart. They attend the right events, nurture relationships, and surround themselves with other ambitious thinkers. Remember this. If you're the smartest person in the room, you're in the wrong room. So why are these assets invisible? Because they don't show up on your bank statement. You can't see them sitting in your wallet. But they are the foundation that makes financial wealth possible and sustainable. Money is fragile. Markets crash, inflation rises, and currencies lose value. But your reputation, your skills, and your network, they can carry you through any crisis. So here's your takeaway for Chapter 1. Stop chasing only what glitters. Instead, start building what lasts. Protect your reputation, sharpen your skills, and expand your network. Because these invisible assets are the true engines of wealth. Chapter 2. Cash flow beats net worth. When people talk about wealth, they often brag about their net worth. I've got $1 million in assets. I own property worth $500,000. My portfolio is 6 figures. It sounds impressive, but here's the problem. Net worth doesn't pay your bills. Cash flow does. Let me explain. Imagine this. You own a house worth $500,000. That boosts your net worth, right? But unless that house is generating rental income, it doesn't put money in your pocket each month. In fact, it may even cost you money through taxes, repairs, or mortgage payments. Now compare that to someone with $10,000 coming in every month from rental properties, digital businesses, or dividends. Their net worth might not look flashy on paper, but their lifestyle is stress-free. Bills? Paid. Emergencies? Covered. Investments? Growing. That's the power of cash flow. Why cash flow matters in 2025. The world is changing fast. Inflation eats away at savings. Markets go up and down like a roller coaster. And holding on to a big number in your account might look good, but it loses value over time. Wealthy people know this. They don't obsess over how much they're worth on paper. They focus on how much money consistently flows into their lives without their direct effort. It's why millionaires invest in businesses, royalties, and income-producing assets instead of just sitting on cash. The trap of net worth thinking. Here's the trap. Too many people chase net worth as a status symbol. They buy bigger homes, expensive cars, or load up their portfolios with assets they can't liquidate. On paper, they look wealthy. In reality, they're stuck. Because when an emergency hits or when they want freedom to travel, to start a business, or even just to take time off, they realize their wealth is locked away. Net worth looks good in theory, but cash flow gives you freedom. How to build cash flow. So, how do you shift from net worth thinking to cash flow building? Invest in cash flowing assets, rental properties, dividend-paying stocks, or businesses that pay you monthly. Build digital income streams, online courses, YouTube channels, ebooks, or subscriptions. Leverage technology, AI, automation, and platforms that let you earn even when you're not working. The key is simple. Focus on assets that pay you again and again, not just assets that sit there looking valuable. So remember this. Cash flow is freedom. Net worth is vanity. A high net worth might impress others, but consistent cash flow gives you peace of mind, security, and the ability to live life on your terms. Chapter 3. The Wealth Gap in Knowledge. We've all heard the phrase, knowledge is power. But when it comes to wealth, that phrase has a deeper meaning. Because here's the truth. There's a massive wealth gap in knowledge. Not just between the rich and the poor, but between those who act on inside information and those who only consume public advice. Let me explain. Public advice versus inside knowledge. Most people get their financial advice from the same sources. Social media clips, TV news, or maybe a personal finance blog. And while some of that advice is helpful, it's usually generalized, delayed, and watered down. By the time the masses hear about an opportunity, the wealthy have already acted on it months or even years earlier. Think about it. When was the last time you heard about a stock, a crypto token, or a business trend on the news? By then, the real money had already been made. The wealthy weren't watching headlines. They were already positioned because they had access to conversations, research, and networks you'll never see on Instagram Reels. That's the gap. The rich play with tomorrow's information. The rest of the world plays with yesterday's. The power of private circles. Wealthy people surround themselves with other wealthy people, not just for friendship, but for information flow. They talk about deals before they go public, industries before they boom, and risks before they crash. This is why networking isn't just about meeting people. It's about entering circles of information that most people will never have access to. Here's the uncomfortable truth. The wealthy don't just work harder. They know things you don't. And that knowledge, applied at the right time, multiplies their money while the majority are still researching whether it's safe. Bridging the gap in 2025. So how do you bridge this knowledge gap? 1. Invest in learning, not just earning. Spend money on mentorships, masterminds, and courses from people who have actually built wealth, not just talked about it. 2. Pay attention to patterns. The wealthy move in silence. But if you study their habits, where they invest, what they buy, what industries are entering, you'll notice clues before the public catches on. 3. Build your own circles. You don't need a billionaire friend to start, but you can join online communities, business groups, and professional networks where higher-level conversations happen. The goal isn't just to collect information. It's to collect the right information at the right time and act on it. Money doesn't just flow to effort. It flows to insight. The more valuable and timely your knowledge, the faster your path to wealth. Chapter 4. Owning systems, not just things. Here's a harsh truth. Owning things doesn't make you rich. Owning systems does. Most people chase things: the car, the house, the watch, the latest phone. And while there's nothing wrong with enjoying what you've earned, here's the problem. Those things don't pay you back. In fact, they usually drain your money. The wealthy understand something deeper. Real wealth is created by systems that generate income over and over, with or without your daily effort. What is a system? A system is anything that continues to produce money, value, or results on its own. A business that runs with employees, technology, or automation. An online store where customers buy products while you sleep. Royalties from music, books, or software you created once, but get paid for every time someone uses it. Investments structured to pay you monthly, like rental properties or dividend stocks. The difference between things and systems is simple. Things cost you money. Systems make you money. Why savings alone don't work? Growing up, many of us were told, save your money and one day you'll be rich. But in 2025, that's outdated advice. Inflation quietly eats away at savings, and interest rates in banks rarely keep up with rising costs. The wealthy don't rely on savings. They rely on systems that multiply their money. They put money into businesses, intellectual property, and income-generating machines that grow far faster than any savings account ever could. The freedom factor. Here's the beauty of owning a system. It frees your time. Think about it. If you have to work every single day just to survive, you're stuck in what I call the earn and spend loop. The moment you stop working, the money stops flowing. But if you own systems, you break that cycle. You create streams of income that don't depend on your daily hustle. That's how wealthy people take vacations for months, spend time with family, or focus on passion projects, because their systems keep working, even when they don't. How to start building systems. You don't need millions to start. Even small systems can grow into massive wealth over time. Launch a small side business online. Create a digital product like an ebook or course that sells repeatedly. Invest in assets that generate passive income instead of sitting idle. Automate part of your job or business so it runs more efficiently without you. The key is to stop asking, what can I buy? And start asking, what can I build or own that pays me over and over? True wealth isn't in the things you own. It's in the systems you control. Businesses, automation, and royalties don't just build wealth faster than savings. They buy back your most valuable resource, time. Chapter 5. Leverage the new currency. If there's one secret that separates the wealthy from everyone else, it's this. They don't rely only on their own effort. They use leverage. And in 2025, leverage has become the new currency. What does that mean? It means that instead of trading 1 hour for one paycheck, the wealthy multiply their results using technology, AI, and other people's time. The old way versus the new way. Most people were taught the old model. Go to school, get a job, and work hard. But working harder has limits. You only have 24 hours in a day. Wealthy people think differently. They ask, how can I get results without personally doing all the work? That's where leverage comes in. Types of leverage. Let's break down the 3 most powerful forms of leverage today. 1. Technology leverage. AI and automation have changed the game. Tasks that used to take hours, writing, designing, scheduling, analyzing data, can now be done in minutes with AI tools. Smart entrepreneurs use technology as their digital employee that never sleeps. 2. People leverage. The wealthy don't try to do everything themselves. They hire, delegate, and collaborate. Whether it's employees, freelancers, or partners, they multiply their productivity by building teams. Remember, One person can only work 8 hours a day, but 10 people working for you create 80 hours of progress daily. 3. Money leverage. This is where the rich really accelerate wealth. Instead of saving every penny, they use capital strategically, investing in businesses, real estate, or opportunities that generate more cash. They understand how to make money work harder than they do. Why leverage is the new currency. Think about it. In 2025, the difference between someone earning $50,000 a year and someone earning $500,000 isn't always intelligence. It's leverage. The person stuck doing everything alone will burn out. The person who knows how to use tools, people, and money to multiply results will scale effortlessly. That's why leverage is more valuable than time itself. You can add more hours to your day, but you can multiply what happens inside those hours. How you can use leverage today. You don't need to be a millionaire to start. Use AI tools to automate your small business tasks. Outsource repetitive jobs to freelancers so you can focus on growth. Pool resources with friends or partners to invest in an asset. Focus on high-impact activities and let leverage handle the rest. The key is to stop asking, "How can I do this?" and start asking, "Who or what can help me do this faster?" Wealth isn't about working harder. It's about multiplying smarter. Leverage is the real currency of the wealthy. Use technology, use people, and use capital wisely, and you'll build wealth at a speed hard work alone could never achieve. Chapter 6. Wealth Loves Privacy. We live in a time where showing off has become a lifestyle. Social media rewards people for flashing cars, designer clothes, and luxury vacations. But here's the paradox. The wealthiest people in the world rarely show their wealth. That's because true wealth loves privacy. Why privacy matters. When you broadcast every move, you invite problems, jealousy, pressure, and sometimes even danger. But when you move quietly, you gain freedom. The rich understand this deeply. They don't need validation from strangers on Instagram. Their validation comes from security, freedom, and peace of mind. While many chase likes, the wealthy chase longevity. They'd rather have wealth that nobody knows about than fame that everyone sees but doesn't pay the bills. The dangers of flashing wealth. Let's be real. Showing off your money makes you a target. It attracts fake friends, opportunist scammers, and sometimes worse. History is full of celebrities and athletes who flaunted their wealth publicly, only to lose it all when the pressure, the spending, or the wrong people got too close. Privacy, on the other hand, protects your money and your mental health. Silent millionaires versus loud millionaires. Ever notice how some of the loudest people online seem rich, but behind the scenes, they're broke or drowning in debt? Meanwhile, the quietest person in the room might own half the block, multiple businesses, and investments across the globe. That's because real wealth doesn't need an audience. Think about billionaires like the founders of tech companies. Outside of business news, they live relatively quiet lives. Their power isn't in showing off. It's in controlling systems, assets, and influence silently. Why privacy builds more wealth. Here's the secret. The less attention you draw to yourself, the more you can focus on multiplying your wealth. No pressure to keep up appearances. No distraction from unnecessary drama. No wasted energy proving yourself to people who don't matter. Privacy also allows you to move strategically. Deals are made quietly. Investments are positioned quietly. By the time the public hears about it, the wealthy have already secured their position. How you can apply this principle. You don't need to be a billionaire to use the secret. Keep your financial wins to yourself. Not everyone needs to know when you make more money. Avoid oversharing on social media. Privacy online protects you offline. Build wealth for yourself and your family, not for strangers' approval. True wealth doesn't scream. It whispers. It moves quietly, grows steadily, and protects itself by staying out of the spotlight. Chapter 7. The Compound Effect of Habits. When people think about wealth, they often imagine one big breakthrough, a winning lottery ticket, a massive business deal, or a lucky investment. But here's the truth. The richest people in the world didn't get there through one giant leap. They got there through the compound effect of small, consistent habits. What is the compound effect? The compound effect is simple. Small actions, repeated daily, snowball into massive results over time. Think about money in the bank. If you save just a little consistently, with interest and reinvestment, that small amount multiplies. But it's not just about money. It's about behaviors, routines, and decisions. The wealthy understand that habits build empires. Small habits, big impact. Let's break it down with some examples. Spending habits. Choosing to invest $200 every month instead of wasting it on things you don't need. Over years, that small decision compounds into tens of thousands of dollars. Learning habits. Reading 10 pages of a financial book daily. That's 3,650 pages in a year. Knowledge that can transform your decision-making. Discipline habits. Avoiding impulse buys, creating budgets, or tracking expenses. These little practices quietly build financial stability while others drown in debt. One habit alone may seem tiny, but stacked over time, they create generational wealth. The hidden power of consistency. Here's the secret. It's not about intensity. It's about consistency. Most people fail because they start too big, burn out, and quit. Wealthy people do the opposite. They start small, stay consistent, and let time do the heavy lifting. They don't just save once. They save consistently. They don't just invest once. They invest regularly. They don't just learn one skill. They commit to lifelong growth. And after years, the results look sudden to everyone else. But in reality, it was built quietly, habit by habit, generational wealth through habits. The compound effect doesn't stop with you. It multiplies through your family. A parent who saves, invests, and teaches financial discipline passes down not just money, but mindsets. Over time, those habits create financial legacies that span generations. Meanwhile, families with poor habits pass down debt, bad money management, and cycles of financial struggle. It all starts with the daily choices you make right now. How to apply this today? You don't need to overhaul your life overnight. Start small. Save a small percentage of every income. Read or listen to one page of financial wisdom daily. Build routines that reward discipline, not impulse. Think of it this way. Wealth isn't built in a day. It's built daily. Money compounds. Knowledge compounds. Habits compound. And when aligned, they create unstoppable momentum. Remember, your future wealth is hidden in the small decisions you make every single day. Chapter 8. Strategic debt versus toxic debt. When most people hear the word debt, they immediately think bad news, late payments, stress, collectors calling. For many, debt is a trap that keeps them broke for life. But here's the hidden truth the wealthy know. Not all debt is bad. Some debt is toxic, but some debt is strategic. And when used wisely, it can be the rocket fuel that builds wealth. Toxic debt, the wealth killer. Let's start with toxic debt. This is a debt most people fall into. Credit card balances, payday loans, car loans for vehicles they can't afford, or borrowing to fund lifestyles that don't produce income. Toxic debt drains you. The interest rates are high, the payments never end, and worst of all, it doesn't create value. Buying a luxury item on credit feels good in the moment, but it quietly chains you to financial stress. That's why most people fear debt, because they've only experienced the toxic kind. Strategic debt, the wealth multiplier. Now let's flip the script. Strategic debt is different. It's debt used to acquire or build income-generating assets. Not a mortgage that pays for a rental property, where tenants cover payments while you collect profit. Not a business loan that funds new equipment, allowing your company to double its output. Leveraging low-interest loans to invest in opportunities that yield higher returns. Here's the key. Strategic debt creates cash flow or increases long-term value. Toxic debt takes money out of your pocket. Strategic debt puts money into your pocket. Why the wealthy love strategic debt? Think about it. If debt was always bad, billion-dollar companies wouldn't borrow billions to expand. Real estate moguls wouldn't use loans to buy buildings. And investors wouldn't leverage capital to scale their portfolios. The wealthy don't fear debt. They study it, master it, and use it as a tool. While the average person avoids debt at all costs, the wealthy ask, how can this debt make me richer? How you can apply this? So, how can you shift from toxic debt to strategic debt? One, to stop using debt for consumption. If it doesn't generate income, think twice. Two, that use debt for assets, not liabilities. If it produces cash flow or increases in value, it's potentially strategic. Three, that study interest rates versus returns. If your investment grows faster than the cost of borrowing, you're winning. Start small. Even small investments, like financing a vending machine business or building an online store, can be powerful. Debt is not the enemy. Misused debt is. When you understand the difference between toxic and strategic debt, you unlock a powerful secret the wealthy have used for centuries. Debt can shrink you or can scale you. The choice is in how you use it. Chapter 9. Inflation-proof investments. Let's be real. Inflation is a silent thief of wealth. Every year, your money buys you less. Groceries go up. Housing goes up. Energy goes up. And if your money just sits in a savings account, it's quietly shrinking while you sleep. The wealthy know this game. And in 2025, they're not leaving their fortunes vulnerable to inflation. Instead, they're moving their money into inflation-proof investments, assets that not only protect their value, but also grow stronger as the cost of living rises. So, where exactly are they putting their money? Let's break it down. 1. Real estate. But not just any real estate. Real estate has always been a classic hedge against inflation. Why? Because as prices rise, so does rent. But in 2025, the wealthy are being more strategic. Instead of chasing luxury homes or overvalued properties, they're focusing on multifamily housing in high-demand cities. Affordable rentals where inflation drives more people away from buying into renting. And even commercial spaces in growing industries like logistics and healthcare. When inflation rises, real estate isn't just a safe place to park money. It becomes a cash flow machine. 2. Commodities and energy. Another hedge? Commodities. Gold, silver, oil, and increasingly, renewable energy assets. The wealthy know that when paper money loses value, tangible assets hold their ground. Gold and silver remain the sleep-well-at-night investments, but in 2025, billionaires are also betting big on lithium, rare earth metals, and green energy infrastructure, because the world is moving toward electric and sustainable solutions. 3. Equities that thrive during inflation. Not all stocks get crushed during inflation. The wealthy target companies with pricing power, the kind of businesses that can raise prices without losing customers. Think. Consumer staples, food, hygiene, essentials. Energy companies. Tech giants building AI infrastructure and cloud services. Instead of gambling on hype stocks, the wealthy focus on businesses that benefit when prices climb. 4. Alternative assets and digital plays. Here's a modern twist. Wealthy investors are also diversifying into alternative assets. Private equity funds buying distressed businesses. Digital real estate, like owning profitable websites, AI-driven platforms, and even online subscription models. And yes, select cryptocurrencies, but only those tied to real utility, not hype. By spreading across old world and new world assets, they stay protected from inflation no matter where the economy shifts. Inflation doesn't destroy everyone equally. It punishes the unprepared while rewarding those who place their money in the right assets. The wealthy understand that in 2025, the key is simple. Own things that grow in value as prices rise. Real estate, commodities, strategic stocks, and alternative assets aren't just investments. They're shields against the silent thief that eats away at ordinary people's savings. Chapter 10. Legacy Thinking. When people talk about wealth, they usually think in terms of numbers. How much money is in the bank? How many properties they own? How big the portfolio looks? But here's the final secret the wealthy understand. True wealth isn't just measured in money. It's measured in legacy. Because the ultimate question is this: what happens when you're gone? Does your wealth disappear with you? Or does it continue working, building, and creating impact for generations to come? That's where legacy thinking comes in. Legacy is about more than inheritance. Most people confuse legacy with inheritance. Handing down money is nice, but if that money isn't paired with structure, values, and knowledge, it disappears quickly. Studies show that by the third generation, most family wealth is completely gone. The wealthy know this. So they don't just pass down cash. They pass down systems. They create structures, trusts, businesses, investments that keep producing value long after they're gone. Legacy is about building something that outlives you. Legacy in practice. So what does legacy thinking actually look like? Teaching financial literacy to your family. Passing on not just money, but the wisdom of how to grow and protect it. Building generational systems. That could mean setting up a trust, creating a family business, or investing in assets designed to last 50 years. Not just 5. Impact beyond family. Many wealthy people pour into charities, foundations, and scholarships. They know their name will be remembered not for what they consumed, but for what they created. In 2025, this also includes digital legacies. Online businesses, intellectual property, and digital platforms can keep generating income and influence long after the creator is gone. Everyday legacy thinking. But here's the part most people miss. You don't need to be a billionaire to think this way. Maybe your legacy is building a small business that your children can grow. Maybe it's investing in real estate that pays your family for decades. Or maybe it's simply creating habits and values, like discipline, resilience, and generosity, that shape how your children approach money and life. Legacy thinking starts with one decision: to build something that lasts. True wealth isn't about what you can buy today. It's about the impact you leave tomorrow. The wealthy know that money fades, but systems, knowledge, and values can ripple through generations. When you shift your focus from income to impact, from spending to sustaining, you stop chasing wealth, and you start building it in its highest form. And there you have it, 10 wealth secrets nobody talks about in 2025. From invisible assets like reputation and networks to the power of systems, strategic debt, and finally, legacy thinking. These aren't just money hacks. They're timeless principles that separate the wealthy from the struggling. Because at the end of the day, wealth isn't about how much you can spend. It's about how much you can build, protect, and pass on. Now, I do love to hear from you. Backhand index pointing right, which of these 10 wealth secrets hit you the hardest? Drop your answer in the comments. I read every single one. And if you found value in today's video, do me a favor. Hit that like button so YouTube knows this content matters. And subscribe to the Wealth Blueprint for more strategies that schools and social media simply don't teach. Turn on notifications so you never miss the next deep dive. We've got more powerful lessons on money, success, and life mastery coming your way. Remember, wealth isn't built in a day. It's built in the decisions you make every single day. Start applying these secrets now and watch how your life transforms. This is the Wealth Blueprint, where your journey to lasting prosperity begins.